Hey everyone, welcome back to Investment Research. I'm Simo, your equity research analyst, and today we are talking SCHD, the Schwab U.S. Dividend Equity ETF. I'm going to give you the latest update on where SCHD stands right now, explain exactly how you can make money with it, and recommend practical places to open an account and how to use them to your advantage. First, the quick facts you need to know and why they matter. SCHD tracks the Dow Jones U.S. Dividend 100 Index and is explicitly designed to own high-quality U.S. dividend-paying companies with a long track record of paying dividends. The fund is large with tens of billions in assets, and it charges an ultra-low expense ratio of 0.06%, which means almost none of your return is eaten by fees, and that matters a lot over decades. SCHD pays quarterly dividends, and today its yield sits in the neighborhood of about 3.7 to 3.8% depending on price and the most recent payout history. That is meaningfully higher than the S&P 500 yield, and it makes SCHD useful both for current income and for compounding when you reinvest those distributions. SCHD has also delivered solid multi-year total returns, though it lags pure growth indexes in some strong market years because it tilts to dividend payers which can act more defensively in down markets. Why SCHD is worth considering as a core holding for many investors. The fund screens for companies with stable dividends quality measures like cash flow to debt, return on equity, and a minimum dividend history. That combination tends to reduce single stock shock risk and to hold up better in rough markets compared to a basket of highly speculative names. The low fee, the focused 100 stock portfolio, and the dividend yield make SCHD an elegant, simple option for investors who want income growth and lower ongoing maintenance compared with picking individual dividend stocks. Now let's move to the practical part, how you actually make money with SCHD and the exact levers you can pull to improve results. You earn income from the regular quarterly dividend payments. If you take distributions as cash, that gives you an immediate income stream to spend or cover living expenses. If instead you reinvest dividends automatically, the power of compounding will turn those quarterly payouts into more shares over time, which increases future dividend checks and total return. That reinvest and hold approach is the simplest path to build a meaningful passive income stream in the long run. Total return matters as much as yield. Price appreciation plus dividends equals total return. In some years, SCHD will lag growth-heavy indexes, and in other years it will outperform because of the quality and income tilt. The smart way to approach this is to focus on multi-year outcomes, not daily price noise. Think in terms of 5 to 20-year outcomes and let compounding and dividend growth work for you. Dividend growth is subtle but powerful. SCHD's holdings have histories of increasing payouts, which means the ETF has tended to raise its distribution over time. That growing income stream fights inflation better than a fixed coupon and creates an expanding cash flow for investors who hold shares long term. Tax placement matters. Put SCHD in a Roth IRA. The dividends and eventual withdrawals grow tax-free, and qualified dividends can be tax-efficient in a taxable account, but many investors prefer the tax shelter of a Roth or traditional retirement account for long-term dividend strategies. If you own SCHD in a taxable account, consider tax loss harvesting when appropriate, and manage lot selection for dividend distributions to minimize taxable gains. A simple plan you can use right now. If you are building an income portfolio, consider a core sleeve of SCHD for say 20 to 40% of the portion you want, dedicated to equities and income. Then add complementary sleeves such as total market exposure for growth and short-term bonds or cash for stability. Rebalance annually to take profits and trim positions that have grown disproportionately in your portfolio. How to size a position. If you are conservative, start small and add on weakness or on positive confirmation of dividend growth. For example, you could dollar cost average on a monthly basis or buy a fixed percentage of new savings to SCHD every month. This reduces timing risk and smooths your cost basis. When to buy and trade signals. I watch the following for tactical opportunities. I pay attention to large dips in the market where SCHD often falls less than the broad index given its quality tilt. I watch the yield curve and interest rate moves because rising rates can pressure high dividend stocks in the short term, and I watch sector exposures inside SCHD. Some quarters it tilts more to energy or industrials, so check the fact sheet before adding. Practical execution tips. Use limit orders to avoid paying a bad price in very volatile sessions. Use fractional shares if your broker offers them, so you can invest fixed dollars every period, regardless of price. Use automatic dividend reinvestment or set it to cash if you need the income now. Where to open an account and why it matters. If your goal is buy and hold dividends, you want a broker with low or no trading commissions, good dividend reinvestment mechanics, fractional shares, easy tax reporting, and sensible customer service. For US investors, the usual suspects are Schwab, Fidelity, Vanguard, Robinhood, and Interactive Brokers. Each has pros and cons. Charles Schwab is a natural fit if you like SCHD because it is the fund issuer. You get excellent trade execution, low fees, great customer service, and advanced tools. Schwab has very good retirement account options and strong research and educational resources. Fidelity offers a competitive platform with no commissions for ETFs and stocks, robust tax tools, and automatic dividend reinvestment that is easy to use. Fidelity also has great retirement account support and solid mobile apps. Vanguard is geared toward long-term buy and hold investors, and it is ideal if you like low-cost, broad index funds. Vanguard's platform is slightly less flashy than others, but the company's focus on long-term investors is compelling. Robinhood offers a very simple app and fractional shares plus commission-free trades, which is great for beginners, but it offers fewer retirement planning tools and less depth in research at the professional level. Interactive Brokers is powerful for advanced investors and traders. It has very low execution costs for big accounts and excellent global market access if you want to hold international dividend ETFs or trade in multiple currencies. If I had to recommend one place for an investor focused on SCHD and dividends, I would choose Schwab or Fidelity for most people because they combine excellent service, low fees, commission-free trades, robust DRIP support, and straightforward tax statements for dividends. The choice between them often comes down to small differences in user interface and promotions, so pick the one you find easiest to use and stick with it. A few brokerage practicalities to consider. Promotions do matter, but read the fine print. Many brokers offer cash bonuses or tiered promotions for new accounts, but promotions often require you to keep assets for a certain period and can create unwanted behavior. If you are opening an IRA or taxable account for the long-term, place emphasis on fees, dividend reinvestment, and the quality of reporting rather than one-time bonuses. Risk management and realistic expectations. Think of SCHD as an income and quality equity sleeve, not a get-rich-quick vehicle. The yield is attractive but not risk-free. Dividend-paying companies can cut payouts in stress periods, and SCHD's performance will vary year to year. Expect periods of underperformance versus growth-heavy indices, and be mentally prepared to hold through cycles. Monitoring and rebalancing. Check the fund fact sheet at least quarterly to confirm sector weights, top holdings, and any index methodology changes. SCHD limits single stock concentration and applies quality filters, but sector exposures shift, so you should keep an eye on whether the fund still fits your plan. Rebalance annually to maintain target allocations and use dividends to buy underweight areas if you want to be tax efficient. How to turn SCHD into a retirement paycheck scenario. Suppose you have $100,000 invested in SCHD with a 3.8% yield that delivers about $3,800 per year in dividends. If you reinvest those dividends for many years, that income grows, and after a period you could elect to take cash distributions to fund retirement expenses. The math and timeline depend on your savings rate, time horizon, and tax situation, but this is a simple way to build a durable passive income stream. Advanced ideas for experienced investors. Combine SCHD with a covered call overlay to generate extra income if you are comfortable selling calls against the ETF. That can boost income but caps upside and adds complexity. Use SCHD with a bond sleeve to smooth volatility, or pair SCHD with growth ETFs to balance income and capital appreciation. If you use margin or options, be careful because dividend strategies do not mix well with high leverage in volatile markets. Final checklist before you buy. Confirm the expense ratio, confirm the current yield, confirm the quarter-end holdings and top sectors, confirm that your chosen broker supports dividend reinvestment and fractional shares. Decide if you want distributions in cash or reinvested. Decide your initial position size and follow a dollar cost averaging plan if you want to avoid timing risk. To summarize, SCHD is a low-cost, well-structured dividend ETF that pays a healthy yield, offers dividend growth potential, and is easy to own for investors who want income plus the convenience of an ETF. The practical ways to make money are dividend income reinvestment, compounding, and total return over multi-year horizons. The best brokers for most investors are Schwab and Fidelity for their account features, DRIP support, and low-cost structure, but Vanguard, Robinhood, and Interactive Brokers all have valid use cases depending on your needs.